Do you find investing for retirement income challenging? Well, it is a rhetorical question. Canadian rules and regulations are complicated enough to make retirement planning a bit of a puzzle. Let's simplify it. At Club Dividend Detective Canada, you can earn more by learning how to use a personal pension plan tax structure and opposite George income automation strategy. This is an opportunity to turn your RRSP or RRIF into tax-optimized monthly paycheck. This strategy detects investment vehicles that pay more with less risk exposure. Our portfolio manager will show you how to spot the lowest cost exchange-traded funds. You will benefit from income automation while potentially seeing your RRSP or RRIF continue to grow. Many people overlook US-listed closed-end funds or CEFs due to misconceptions, such as the belief that the cheapest way to diversify your dividend payers is using ETFs. However, ETFs are no match to CEFs, as they do not offer an opportunity to acquire a dollar's worth of assets for 90 or even 80 cents. Apparently, if you know your game plan and have the right strategy, you can get something for nothing, literally. Join Club Dividend Detective Group on LinkedIn or subscribe to Game of Yield Club channel on YouTube and find out more. Using CEFs adds measurable value and instant income boost. Because of the tax rules at play, the strategy works best for those who have sizable RRSPs or RRIFs. Just like identifying strong dividend-paying stocks involves evaluating factors such as a company's history of consistent payouts, dividend yield, and financial health, there are 7 filters our Pensionizer Top 50 Index uses to screen hundreds of funds. By conducting thorough research and analysis, Pensionizer Portfolio Manager can select 50 and 10 monthly paying income funds that are clearly mispriced, but have the momentum and the potential to add growth to income generation. All it takes to become a believer is taking a look at a real-life investors. Each example is a mini case study of dividend detection and discount diagnostics to fund retirement while protecting wealth. By applying opposite George strategy, you would invest in established companies and the best Wall Street asset managers, with a history of delivering value and reliable stream of monthly distributions. Last but not least, on top of net asset value discount harvesting, you'd keep a ton of money otherwise wasted on taxes and fees and save a lot of time. In conclusion, pensionizing your RRSP offers the triple advantage of higher income, lower cost structure, and long-term wealth preservation. Using a personal pension plan in combination with registered accounts and Pensionizer Index eliminates a 15% US withholding tax on interest and dividends. In certain circumstances, this setup has everything you need to achieve income independence in retirement. We think this opportunity deserves your attention. If you have your own experiences or have questions, please share in the comments below. Don't forget to subscribe to Pensionizer channel. To take it a step further, download Game of Yield app and gain access to members-only fully interactive video guides and daily tips on growing your wealth wisely. Remember, the journey to financial success begins with informed decisions and strategic planning.